Okay, so I think we are live. Okay, it's almost 10. So I'll just go ahead and start. Good morning, friends, and thank you for joining us this morning. For those of you returning to watch our show, I welcome you. Thank you so much for your support. I also want to, welcome anyone that's watching for the first time to please subscribe to my channel and also Pedro's channel. That way you get any reminders and alerts when we're going to go live, and you won't miss any of our shows. So with that, I'll introduce myself. My name is Marie Torossian. I'm a certified public accountant and a chartered global management accountant. I'm an experienced auditor and a CFO, and currently I work as a CPA advisor and a transformation coach for entrepreneurs and small business owners and mid-sized business owners as well. I've authored a couple of books, The Complete Guide to Business Growth, and also I have an ebook, which is called A Business Owner's Guide to Operational Accounting. I've also created a unique framework called Valuation MT, which I use specifically to help business owners go from 1 million to 10 million. Today, I am joined by Pedro Gonzalez, CPA, my friend and my partner when it's time to do tax returns. And with that, I'll let Pedro introduce himself. Pedro, good morning.
Good morning, Marie, and good morning, everybody else. Yes, my name is Pedro Gonzalez. I'm also a CPA, also with experience in auditing and accounting. My areas of focus is to help our clients lower their taxes, improve their cash flow, put more money in your pocket in exit strategies. So that's how we can bring value to our clients. So good morning, and excited for this morning.
Yes, absolutely. So, Pedro, the other day, last week we kind of covered a few areas of tax, due dates. But one of the things that we talked pretty a long time about was this specific gentleman that we've met, and he has missed filing his taxes for 3 years and even payments as well. So I want to, after talking to him more, I think we found a lot more information about this gentleman that I think it would be a great way to help our audience, that if they are in that situation or they know of someone who's in that situation, that they can help them, with this information. So this gentleman was actually working abroad for quite a few years and literally just coming to the U.S. for a year, barely 2, and then he was out again. And while he was working abroad, he was not actually filing taxes or paying anything. So what does the rule say from a tax perspective? What does the IRS say for those of U.S. citizens working abroad? What are their requirements?
Yeah, I think what happens sometimes, could be misunderstandings, is that the U.S. is taxes its citizens on worldwide income. Mm-hmm. So even if you are abroad, let's say you close all your account, you have no connection to the U.S., you still, as long as you're a U.S. citizen, you still need to file federal income tax returns.
Right.
So what happens in some cases is that you might have no income here in the United States, and it might be that you might have no tax obligation, meaning that even if you were to prepare your taxes, it would have come up to let's assume 0, but then you can still be penalized for failure to file.
Right.
So, and that happens in some cases, individuals that work abroad and, they quote unquote forget, or they assume, well, I'm not in the U.S., so why would I file taxes there? Is that we are, if I'm not mistaken, probably the only country that taxes its citizens on worldwide income. So, yeah. So you still have an obligation, even if you're abroad. There's, of course, there's some deductions and things that you can take, but you still need to file.
Right. Absolutely. And then would they file using the same forms like the 1040, or is there any other form that they need to be using to show their income?
No, they'll file, again, you're a U.S. Citizen, you're just simply living abroad, and then you specify that on the form, but yeah, you still file your tax returns. As the only difference is, of course, it doesn't apply to Florida, but in some other states where you would have filed a state tax return, that you don't have to, because you're no longer a resident of that state. But the federal is the one that takes once you cross the enter the country, they're going to be the ones knocking and going after you. So, but yeah, you file the same forms and you report your income. And what also happens is, and this again is a shock for some people, is that you might still have to pay federal taxes.
Sure.
You get a credit for the taxes that you paid in the other country that you have been residing.
Right.
You're supposed to file taxes in that country, pay taxes over there, but you need to still report that same income. Let's assume again, no zero income here in the United States. You report the same amount of income here in your federal return, and in some cases it works out that you still have a difference between the tax rate in that country, and because basically what they want is that you pay a minimum tax. And
Got it.
If that tax is lower than that target or minimum, then you need to pay the difference.
Got it. Yes. So with that said, I mean, one of the situations that our friend here actually went through is that after so many years he was abroad, and then he came back to the U.S. and he had years and years that had missed and he hadn't filed. What happened is that the IRS took hold of his bank account, so basically cleaning it out. So how could I guess in a way, how could our audience, not only just make sure that they're filing their taxes, like let's explain to them the real effect of if that happens, what kind of financial situations they're going to find themselves in, because that could be really detrimental.
Yeah, no, the IRS, well, now, one of the things is that the IRS has to follow due process. They cannot come in and on first notice freeze your accounts. Now, could it happen? It could happen. I mean, it's like any other collection agency that they're supposed to follow due process. And now that's why it's recommended that they get, if you're planning to come into the country, to get advice before getting back into the country, especially if you're in a situation like that, like let's say I have not filed, to in essence get in compliance prior to getting into the country. Now, let's say you got into the country, you have not filed, the IRS is supposed to notify you first.
Got it.
You know what I mean? That we have not, in essence, a lack of filing or something of that note. Now, you don't respond to that. What they'll do is, and then they'll, in essence, compute based on the last information that they have available, and they'll say, well, the last report you had an AGI of, I don't know, $300,000. So based on that, we're going to go ahead and say, well, you're going to owe us X amount of dollars for so many years that you have not filed.
Right.
They're not going to take deductions for you. In essence, they're going to put you in a worst case scenario. You know what I mean? Because you're not responding. So even at that point, you still don't not respond. Then they'll issue liens, and then they'll take assess. They'll assess the taxes, and they put liens in your accounts, and collect it. And so what that could be some scenarios some people find. The goal is that as soon as the IRS finds out, actually it's better that you be proactive. But let's say that you're taking your chances, and now the IRS contacts you, is to immediately get somebody to help you to organize and how to properly respond to the IRS.
Right. And then we did cover a little bit of this from the fact of how to be prepared for the IRS audit in a way, is to make sure, you not only are you proactive, you're reaching out, making sure all your documents are, ready, all the supporting items, receipts. So if you don't have them, it's really important to get those ready as soon as possible. So you have a good support. And then, of course, hiring, someone like you, a CPA, on a tax representative, you'll be able to guide them through all the different documents that they will need. And that way you can represent them at the IRS.
Correct. No, I agree. I mean, again, I know we already discussed this on the prior podcast, but the accounting. Yeah, I mean, you have to have good record keeping. Especially anytime that you're dealing with IRS audits, any type of notices of levies or anything like that the IRS is going after you, is to have good documentation.
Yes.
to be able then to counteract what they're, because again, now you're in reality, you're in a disadvantage. I mean, the IRS now, you have to prove, in essence, your innocence. You know what I mean? That either I don't owe that money. You know what I'm saying? It doesn't work exactly. The tax court doesn't necessarily work, when the IRS does not work like, bring guilty. They assume you owe us, now prove that you don't owe us. And so that's the part that a lot of people lack, is how do I document my income if I have a business? And this is the case of this other individuals, that if you have income from businesses, then you have to have financials, you have to have good record keeping to demonstrate not only your income, but they're going to go after heavily is your deductions, your expenses. You know what I mean? Because you're going to say I earned a certain amount, but then at the end I have a loss.
Yes.
Okay, so you got to prove it.
Exactly. Like how did you get to that loss? What are all these different expenses that you're claiming? If you don't have proper, records to support that, your claim, then you're in even bigger trouble, because then, it's like as if there's almost like cause, like a reason that you're trying to hide something, versus just being open and just be like, here's everything. I have all the proof. I have nothing to worry about. So another situation that arose, and then I've had a little bit of experience on this one too, is, when someone is going through a business owner. Again, we're kind of speaking about from a business owner's perspective, especially. And if they're going through a divorce, then, it's even more important, because, if you don't have your financial records in check, your tax returns are not correct. So, and if all of these are multiplied on top of each other, that none of them is correct. So it just magnifies the amount of work that we as accountants and tax advisors will have to do to make sure years of information is in order, to be able to help these, the gentleman or the individual that's going through this situation. And then not to forget, the subpoenas for the records, from the spouse's side of the attorney, all of that's going to pull all the data for years and years that they need to make sure they have that information. Have you had a similar experience, Pedro?
Yeah, the divorce cases are, similar whenever you have even business split ups. Yeah, when you have two partners that have put together a business and now they're going separate ways. It's kind of the similar situation in divorce. If you have a community asset that those two parties developed, and now there's going to be separation of assets. That's one aspect. Obviously, the obvious, which is going to be the child support and the money. We're familiar with that, but sometimes people forget. This is why I always encourage, if you're a business owner, is to get some legal advice. You have to be careful because, for example, a lot of non-liquid assets can be transferred either tax and in some cases penalty free. But there's some assets that will require a certain documentation, something called a qualified domestic relations order, something like that. So, so all of that documentation has to be in place. And if you don't, sometimes people try to quote unquote save some money, but in the end, they end up getting themselves into deeper problems.
Yes.
Maria, you take this account and I'll take this other one and we're good. Let's go. And without realizing that potentially I might be causing a taxable event because I didn't want to call the CPA. I didn't want to call the attorney to really, guide me in this process. I can tell you that it will save hundreds of, in some cases, thousands of dollars of taxation that could have been prevented. Yes,
absolutely. We've been kind of, I know we're going at it quite a few times, but it does really make all the difference when, you know how to keep records. Like in the case of the client that I had, I went there as a consultant, and I was, as I was looking for a few things, I was supposed to help them through their audit process, kind of stepping in the shoes of a, kind of a CFO and helping them go through the audit process. But the records were all over the place. There were months and months of unreconciled items. Their accounting team was literally changing almost on a weekly basis. So the records, I couldn't find anything. And then to put on top of that, the gentleman is going through a an audit process with third-party auditors, and then he's going through divorce at the same time. I mean, it was so stressful for everyone that was there, including, of course, the gentleman that's going through it. And it was very, very hard to gather information. Sometimes I had to, for example, simple things as he's the main owner and he took money out of the business, for himself or something. And I would ask, where's the support? What did he use it for? Like, I wouldn't know where to put that information on the balance sheet, or if it's going to be on the P&L. What is it for? And so we couldn't find records. They had to dig in emails, and then I would have the business owner print it out, sign off on it, because I had to create some type of a record that shows the intention of what that money was taken out for. And then all of that goes through the documents that are pulled out through the subpoena. Every single piece of paper is subpoenaed. So it's a very challenging, not only for the business owner, but also the accountants and the attorneys helping him. Because if that information is not readily available and properly filed, then it's just literally going into all over the place, going into file rooms, pulling up boxes, looking for where the records, where are they? In my case with this specific business owner, he also had two other businesses. So there was affiliate, businesses, and there's a lot of money transfers or whatever, happening. So it was like literally going down the line. Almost, I felt like I was doing almost like forensic accounting, because it just went beyond a normal, controller, CFO type work. And it was literally going to the file room sometimes with someone on their team and just saying, okay, if this happened within this year, can we just go in and find, this document that could support this transaction? So it can be very, very challenging and very stressful.
It is. And you're right. I mean, the divorce process by itself is stressful. Mm-hmm. And on top of that, when you add, and I guess this is something that I know that we have talked about the record keeping. Here comes another scenario where record keeping becomes so critical, because it will save you. It almost will save your life. I mean, and so at the moment that that there's going to be a separation or something like that, it has to be, if you own a business,
yes,
no matter how complex or simple, is that it's going to be part of the investigation. Part of the due diligence. They're going to ask you for tax returns, personal and business. It's pretty standard. I mean, so you have to be prepared for that. So you better be ready to have your taxes at least go 3 years minimum. Just go make sure, do I have my last 3 years personal? Yes. Do I have my last 3 years of business? Yes. Okay, now make sure I would go meet with my CPA or my accountant, whoever I was doing those tax returns and financials, and make sure that everything reconciled. Because another problem has happened is that they submit tax returns, and guess what? Then after that, they're going to start asking for bank statements. They're going to be asking for financials. And in some cases, they discovered there's no congruency between deposits and your financials and your tax returns. Now, there might be a reason for that, because again, a lot of these individuals are not accountants. They're not CPAs. These are attorneys. Mm-hmm. So they're there to deal with the law. So they're looking at tax returns and financials. In some cases, some of them do not understand, accrual basis versus cash basis and things like that. Well, there's something fishy here. Something is off. And maybe not. There's a good explanation, but all of that to have it ready, because then it will save you time. It will save you on fees, unnecessary phone calls, unnecessary stresses. So having all that ahead of time. That's why I advise at the moment that things are not going to go in the long term, is to hire an attorney to advise you. Get together with your CPA early as possible. Mm-hmm. In case if let's say you're behind your accounting, let's bring it up to date early. So all of that is taken care of. And again, with the understanding, if you're gonna go through a divorce, just disclose it up front and be, listen, Marie, I'm gonna go through a divorce. We're in the early stages, so Marie can go and say, okay, so now I know that I need to have an extra step. So let's make sure we have these documents. Those large distributions is an area that they're going to go after, because they want to know where's this money going, because all we're doing is taking money. It's not an expense, so where did it go? They're going to
Yes.
do a tracing the money.
Hmm.
And in some cases, depending how big the case is, they might hire a forensic accountant. And his
Absolutely.
or her job is beyond of debits and credit. There is to follow the money. They're there to see where did this money go, and potentially if it's being hidden. You know what I mean? They're hiding this money. So having all that properly documented, so then you have preventing again unnecessary headaches.
Yes, yes, absolutely, absolutely. Yeah, in my experience, that was one very difficult one, and it is very stressful, very very stressful. And then one of the interesting things that I noticed while working in this case myself, um, those big transactions, even if they were company, different companies, intercompany sending to one another, there were these open liabilities or
Correct.
receivables one
Correct.
and the other that we had to look through, and we were like, why is it still open? It's been like 5 years. Is anyone going to pay the other one anytime soon? And so those are very big questionable items there. Why would one company have a over $5 million, let's say, just throwing a number out there, $5 million, liability to the other company, and when both companies are working and still active, why is it not getting paid off? Another situation that arose was when one company or is borrowing money from the other one, and there's no documentation.
Yeah.
There's
Yeah.
so why was it borrowed, or what was it? Why was it given out? So there's no reasoning. There's no actual intercompany, let's say, interest accrued because it's taken as well. It's the same owner. Well, but each one is a separate entity. Each one is a separate company. So we have to treat it as if it's like separate, and make sure we have all the documentation. So if one company is, borrowing from another company, even if it's the same owner, there has to be proper documentation. And then when it comes to whether it's the forensic accountant or the auditors looking through it, these are all red flags that are going to come up if you don't have documents. Mm-hmm. So record keeping is so overlooked, and I know we're going to probably talk about this constantly as we go through different scenarios of experiences we've had. It always comes back to, where's the support? Every auditor is going to ask, where's the support? So why not do it the right way the first time, and make sure you have all the documents. And if you're not sure what to do, just hire someone to come in, an accountant, a controller, a CPA to come in and actually help you through putting all the records together, at least for the last 3 years. And then now you have a system and a process which we would be able to put together, say, okay, this is the process that we follow. And when something is required, this is all the pieces that we need.
Again, I don't think we can emphasize enough about the record keeping. But the reason we keep, bringing this up, because again, as we've been having this conversation, is that you can see why is it so critical. I mean, imagine divorce cases, even business split ups.
Yes.
It happens. I mean, again, it doesn't have to be a divorce. It could be that right now you have a joint venture, and let's say the deal goes sour. It most likely is that the other party is potentially going to make a claim against you. So you not have the records in order, all of documentation. One of the areas that tend to be very lax is, you brought it up, and that is related party transactions. Mm-hmm. It's very lax because we look at the you're 100% shareholder of your S corp, and you look at that as my other bank account, and it's not. I mean, if you want to exactly no, and there is this is a topic for an attorney to discuss, but it is a separate entity.
It is.
If you want to create it and create a proper protections, why create a corporation? Many times it's also for legal protection, to separate yourself from the So, but then you don't treat it that way. You treat it as my other bank account, and so then you defeated the purpose. You know what I mean? So if there is related party transactions, some cases in another scenario that I saw was relatives. You know what I mean? Now a corporation many times is formed by friends and family funding your corporation. Now it's your business. Now you're 100% shareholder. Let's say, I don't know, mom and uncle and my cousin. They start pumping money into your idea, and then say, hey, I believe in you, Marie. So let's start putting money into your company.
Yes.
You create, it's supposed to be a loan. Now, they know that you don't have the money year one, potentially not even year 2 or 3. So that same $1,000 that each one gave you is still sitting there as a liability. You can say, but why this is still there?
Yes.
Well, it's a loan. In your head, and I'm going to repay my dad and my mom, my cousin, and my auntie. I'm going to repay them when I have the money. But there's no documentation for that. Now comes a separation, a divorce, or split up. They're going to go and say, but this is not a liability. You really don't owe this money.
Right.
There's nothing to support it. Now, if you have your loan agreements, then at least you can say, listen, I do have loan agreement with this individual that I borrowed this money. This is not my money. I have to pay it back, and it should be taken into account. Leases. Sometimes there's lease obligations, and in some cases, what happens too is that you're probably using the office of, let's say, a friend. So I have extra space, and they say, Marie, you can use the second floor.
Sure.
You know what I mean? And until you get your business going, and then we'll talk about, rent. But right now, you and I have a verbal agreement that the rent is going to be, I don't know, X amount of dollars per month. And when you're ready, in a couple months or a year from now, then we'll recover those months that you did not pay me. Now, there's a split up. I have an obligation to Pedro.
Right.
But where's the documentation? That doesn't exist.
Doesn't. No.
Exactly. So then all of this should be accounted for. All of this should be in writing. You know what I mean? The documentation. So then in a situation of IRS audits, I mean, you name it, all the things that we have discussed so far, and you can see another topic, and why is it that documentation is so critical?
Absolutely. Yeah. And it doesn't have to be a 20-page document. It could be a simple 1-page document, just says, the next 6 months, for example, in the case of that you said, the rental thing, it could be a simple document between two parties saying, I'm allowing this space for my friend to occupy for the next 6 months. He doesn't have to pay me the first 3 months, and then he's going to be blah, blah, blah.
Exactly. Yes.
Something simple like that. It doesn't have to really be a 20-page, very, legal heavy document. It's just but at least it clears up the understanding for both parties. It's what's the expectation. Mm-hmm. And it's a valid document. Both parties have signed it. So, yeah.
Correct. No, yeah. And again, that in this other scenarios, I know we have not touched up yet, but, when you look in the areas of casualty.
Oh, yes.
You know what I mean? Business interruption losses.
Yes. Oh, wow. Yes.
Economic injury. You know what I mean? You're trying to demonstrate that there was a loss incurred by injury, a loss incurred because of a casualty, and I need to demonstrate that I do have that loss. Now, and again, those are scenarios that over the last 20 some years that I've been in this, I see it happening. You know what I mean? Then it becomes a nightmare, because now you got to go, and what they're going to do, they're not going to ask you, okay, show me your bank statement for the last 3 months, like when you go to apply for a mortgage. No, they're going to say, give me the financial for the 3-5 years in some cases. Can you imagine now in 2021 to ask you for financials from 2016? Right. And you have not, you kind of, whatever. I kind of put numbers in there and sent it. Now I have a loss, but your financials don't show that.
Yes.
Because, I was trying to show the my income. You know what I mean? You know what I mean? So now you have an issue.
Oh, yeah, for sure.
So,
go ahead.
No, what we're going to say that, again, the importance of having the accounting is not, that's why I keep emphasizing the investment. Having good quality accounting pays off. And long term, I can assure you it pays off. Because you can see so far, and then this is number 3, and you can see all of the reasons why it's so important. And we haven't touched up on some other areas that you're going to encounter that when you're going to say, oops, I wish I would have, done this differently. So.
Yeah, absolutely. And then one of the things that I think I'm gonna mention it here, but we'll cover it with next week is, what we talked about the other day is, when a company is ready to go public, all the different things that they need to do, including record keeping, that's going to be so relevant to the new investors, and then really also going to going public. So that's something we can cover next week if that's good. So that way we kind of get our audience hopefully interested and wanting to hear about how to go, public, or if you're looking to get an investor, how to attract those investors, making sure all your documents are ready to be viewed by your investors. Because that's going to be key to make sure that they trust you, that you know what you're doing. So with that said, I think this was a really, really great chat today, Pedro. I enjoyed it as always.
Yes.
Thank you for our audience that was here today, and we really hope you come back and join us next week. As just a reminder again, it's every Thursday, 10 a.m. Eastern, and we're going live on YouTube, Facebook, and LinkedIn on my channels, and then we'll be also posting it on Pedro's channel as well. So make sure to subscribe to the channels and the Facebook page and the LinkedIn page for us, so you would be able to see it on any other platform. So with that, we wish you a wonderful day, and then we'll see you next Thursday.
Okay, take care.
Take care. Bye.